So thank you for joining us on our third day of our 13th Emissions Summit in Europe. Today we will be discussing AdBlue, mainly from a producer's perspective, as well as some of the other stakeholders. For those of you who were with us yesterday and those who weren't, we had a really constructive meeting yesterday as part of our ASEA workshop, looking at how the industry was going to adapt to the rising demand from the passenger car segment for AdBlue. As I said yesterday, it poses many opportunities, clearly in terms of the size of the volume that will come onto the market from that segment. But also, as I said yesterday again, you're going to be addressing 3 million new customers per year, and that will rise over time, who are buying, for the most part, privately, especially in later years, and also will be expecting to operate through a retail outlet rather than through bulk supply or whatever else. So clearly this poses certain structural challenges to the industry, and it also places some emphasis on the industry as well to protect the future role of diesel in the passenger car segment. A big part of the future of diesel in passenger car will be the acceptance of SCR technology and the ease and practicality of acquiring AdBlue for the driver. So these are some of the issues we discussed yesterday. I think the consensus was broadly that a lot has been achieved in the last couple of years, but there's still a long way to go. There's a lot of education needed to be carried out with drivers from OEMs and from fuel retailers. There's money to be spent on the infrastructure for supply. And finally, there's a lot of regulation and enforcement to be done on the use of cheat devices, which could potentially come into the market with the number of passenger cars that are coming on. So today, like I said, we shift more to the supply side of the market. I'm going to give you an overview of what's been happening really on the demand side in terms of volumes and where we are with consumption. Also posing some of these questions again about the challenges the industry faces in the coming years. Then we have a panel discussion looking at quality and other issues in the market, including cheat devices. And then we look at AdBlue from a regional perspective. We have a number of distinguished speakers speaking about their markets. And then we're going to talk about how players in different markets can learn from each other and some of the issues that they're all facing. And then finally, we'll wrap up with a panel discussion about what can be learned from each other in terms of experiences and confronting the issues that the industry faces. So like I said, I'll start off by giving you an update on the European AdBlue market. The presentation will cover the following, which is development of the AdBlue market for medium and heavy duty vehicles. I've broken this down by segment just to make it easier. Recent trends in AdBlue demand for non-road mobile machinery, the growth of the market for AdBlue in the passenger car segment. We're going to cover some aspects of the competitive landscape in AdBlue in quite light detail because we'll have plenty of expert opinion later. And then we'll draw it all together at the end. So I think the thing to remember is that on the heavy duty and non-road side, the market is relatively stable in terms of the technology has been accepted. There's diesel as a technology as well is entrenched. There was a discussion yesterday in the other room, if you were in here, which was about the future of diesel in the heavy duty and non-road markets. And really, I think the consensus that I heard later was that the expectation is that diesel is here to stay for the next decade at least in those markets. There are alternative technologies, but very few of them seem to be feasible at this point in time. And given the lead time that you have on the rollout of these new technologies, the acceptance and the building of infrastructure around them, you're looking at a long-term horizon for diesel to be the predominant technology, particularly in the heavy-duty markets and non-road markets. Turning to this slide, what it shows you is EU 28 plus EFTA heavy and medium-duty vehicle sales in the last couple of years. What you see is a surprisingly strong trend upwards from 2013 to 2016. Growth is 9% in 2016 year on year. This growth has continued into 2017. We've seen a strong start to the year, up 8% on year. And what does this mean really for the AdBlue market? Well, like I said, you take this combination of the fact that the technology, the SCR technology is entrenched within the market, So vehicle sales really, that just serves to speed up the rate at which older vehicles, non-SCR vehicles, are replaced by SCR vehicles. So it speeds up the rate of growth in the SCR fleet, which then, of course, feeds through to AdBlue consumption thereafter. The thing to remember about vehicle demand on the commercial vehicle side is that largely it's driven by replacement. So as the fleet gets older, you start to see an acceleration in vehicle sales to replace older fleets, older vehicles. We've had several years of increasingly strong sales, and in fact, we had expected that in 2017 the market would be relatively flat. It's turned out that it started out quite strongly, but should this growth continue in 2017 of 8%, we do expect that come 2018 you'll start to see growth tailing off, and that will continue to 2020, and then you have another resurgence in the replacement of older vehicles. But whatever happens, that is a relatively positive message, because for every new vehicle that comes onto the road, it will have SCR, but near enough, and that will replace one that doesn't, and that will see the fleet increasingly grow. Now, this chart on the left is taken from our Monitor publication, and it's cumulative monthly SCR fleet for heavy and medium-duty vehicles. So the figure you see in each increasing bar is the SCR fleet as of that month. So at the moment, we're for March 2017, we're just over 2 million vehicles, roughly 2.2 million, and that's growth on last month, March, of around 16%. So again, that's because of the rate of vehicle sales in the last year, and that replacement of older non-SCR vehicles. Looking out to the future, what do we see? Well, we continue to see strong growth in the SCR fleet. If you take the European heavy-duty market, is around 4 million vehicles. By 2026, we expect the majority of those to have been replaced with SCR vehicles. So the fleet will be nearing completion towards the end of the coming decade. But in the meantime, we're still roughly only halfway there in terms of the replacement of non-SCR vehicles in the market, which gives you an idea of the rate of growth that still is left to come in the heavy-duty market. So while it may appear slightly static and slightly uncontroversial and not that exciting, there's still an enormous amount of growth to come in AdBlue volumes from this sector. It's a similar picture in non-road. We had a number of relatively poor years of vehicle sales, equipment sales. So this is what the chart shows. This is equipment sales by industry from 2010 to 2026 for non-road. So again, like I said, we had relatively poor sales from 2010 and after the financial crisis. And our expectation, along with our partner company KGP, is that vehicle equipment sales will increase over the coming decade to replace the older fleet. Again, it's a very similar story with heavy duty. Older non-SCR equipment will leave the market, SCR equipment will come into the market. Diesel technology is the predominant technology over the horizon that you see in front of you in that chart and beyond. So it's a good news story in the sense that any sale of equipment means more business for the AdBlue suppliers. Again, of the equipment sales we've just seen, the ones that predominantly use SCR are 50 kilowatts and above. That's roughly half of new equipment sales in Europe. So again, the growth story for AdBlue is compelling. The introduction of Stage 5 in 2019 and rolled into 2020 will likely see an increase in the power bands using SCR. So we don't foresee any technical difficulties coming from the introduction of Stage 5. Again, if anything, it should expand the SCR fleet, although some of that is to be determined as yet. Now, really, where the interest is from the discussions yesterday, and just in terms of where the movement is on the passenger car and light-duty vehicle segment. There's a number of issues to be faced here. One, diesel technology is not as secure a bet in this market as it is in the others I've just discussed. Two, like I said, the introduction of SCR on a mass scale since the end of 2015 means that you have a largely uneducated, in the sense of AdBlue, new customers coming into the market. They will be buying through retail, as I said, and they have greater choices in terms of how they spend their money and on what vehicles. Which means that one of the things that came up yesterday, especially from the fuel retailers, is that if they're looking to build a business case for investment in infrastructure for AdBlue, for passenger cars, they need to know what's going to happen with diesel. And one of the issues that came up at that discussion was that fuel retailers really have very little, have received very little in terms of validation from either OEMs or from what they see in the market about the future of diesel in Europe for this segment. Now, whatever happens, our view is that diesel is going to lose market share. We work with a company called LMC who provided this chart. And they've looked at trends in vehicle sales over the last number of years and looked at what's going to happen in the future. Now, there is a case that this increasing after-treatment costs, the customer is going to have to pay to some extent for the technology that's in the vehicles. They will also have to buy the AdBlue. This is clearly going to put some people off diesel sales. You're going to have increased competition from alternative technologies, namely hybrid, and to some extent electric. And really the big kicker as we see it is this idea that there's significant scrutiny from legislature and the press over diesel, and this could see a move towards banning of diesels in certain areas. It's been discussed certainly in London, in Paris, Stuttgart as well. Virtually every major city in Europe is at least talking about banning at least older diesel vehicles, and in some cases they don't really discriminate, or at least the message is not discriminated enough in the press about which vehicles they would ban. It's clearly a bad news story for the industry, primarily because if you're a car driver looking to replace your vehicle today, you would take a hard look at diesel and say, okay, well, what will the resale value be in a number of years' time? Am I going to be able to use this vehicle in certain areas? Now, that's still speculative and still to be played out, but I think it has to be considered that that is a threat. Given that, we still think that the role of diesel in about 10 years' time will still be around 33% or a third of the market. So this is still a significant portion of the market. And the other thing to remember is that in the context of AdBlue, you're starting from effectively zero in terms of SCR in the last year, and there's a significant amount of growth to be had in terms of new volumes for AdBlue from the passenger car market. This chart shows you the extent of that. So this is vehicle fleet by country for a number of countries in Europe, and it shows you the compliance, the percentage of the fleet that complies with which Euro standard. Now, in the majority of cases, you see that it's sub Euro 6 clearly, and again, even in some of the major and developed economies, more developed economies within the region, Euro 4 below is still the predominant compliance within the fleet. So that tells us that there's a long way to go in terms of the growth of the SCR fleet in Europe. Where you have higher rates of compliance, it tends to be with the higher standards, it tends to be in the smaller countries as well. Again, where is diesel in the market at the moment? So we've seen a growth from 2007 to 2008, where diesel had its highest penetration into the market of around 50%. This is the total EU15 plus EFTA at the time. And what's happened since? Well, you have seen a small erosion of that market share in the last couple of years. And the blue bar at the bottom on that top chart is the one to look out for. You've seen a growth in alternative technologies, namely hybrid, as I said before, in the last 2 years, really. Again, that blue bar is an increase in market share over time, but you still see a significant amount of diesel in the market in that period. And as if to just reiterate that point as well, the overall picture, when you take it in its full context, is not as bad as the previous chart on the first slide of this section would lead you to believe. Diesel sales are still strong. In 2016, we had 6.9 million registrations. in Europe, and in the Euro 15 that is. And this was still represented growth year on year from 2015 and 2014. So despite all the bad press, despite the competition from other sectors, diesel vehicle sales are still strong at present. And again, like I said, in the context of AdBlue and SCR, the story is very good because you're going from a very, very low base in terms of the SCR fleet and SCR sales. So with the introduction of Euro 6B, we saw really the acceleration in 2016 of SCR sales to around 2.75 million units in the whole of the EU 28. Again, we see this rising over time quite sharply. And as I said in the presentations yesterday and have been saying for a number of months, the scale of this growth in terms of the AdBlue business is very, very significant. You're looking at 3 million or around about 3 million new customers every year and increasing to 4 million and then 5 million post 2020. In terms of the fleet, that means you're going from effectively 2 million in 2015 to 45 million over the next decade. That's 45 million new customers for the AdBlue business, all by and large, or to a large extent, looking for a retail offering at the most convenient point of use and the most economic point of use as well. So clearly that poses a number of challenges for the industry, as well as the huge opportunity there is. And I won't dwell on this for too long because we went through this in a lot of detail yesterday. But the market effectively needs to confront this opportunity or this challenge, as you see it, of so many new customers. Now, how will that pan out? Well, the evolution of supply in this segment is looking like it will follow the following structure. So you start out with the lowest capital investment from suppliers, which is on bottles and canisters. You can get this to the market quickly. It's a format that the customer understands. Then we've tended to move towards pumps with above ground storage, again, because the capital cost compared to a pump on the fuel island is relatively less expensive, according to the presentations yesterday, around half the cost. And then eventually we'll move to more and more integrated pumps in the supply network. And again, that supply network is going to have to expand because currently this is where we're at in terms of pumps for passenger cars for AdBlue. We've identified 229. Following Rosalie, my colleague Rosalie's presentation where this slide was shown yesterday, we actually found out about a number of other sites, which is very positive. So this number is probably now, given what we heard yesterday, we're looking at maybe around 250 pumps that we will look into and confirm in the next couple of weeks. Again, really, that infrastructure is going to have to grow by several 100% in order for it to be meaningful for a complete coverage for the passenger car segment in Europe. But at this conference last year, we were looking at a number of around 50. So it gives you an idea of the rate of growth. And also, what really struck me yesterday after the discussion when people came up and we spoke was the level of prospective investment that looks like it's coming on as well. There's people, despite the risks associated with this enterprise, and not being shy about putting their money where their mouth is, at least on pilot sites, and they're willing to see where this goes. Again, largely because of the scale of the opportunity that's apparent. Now, I just wanted to cover the supply side of the market in, like I said, a very light touch, because you're going to get a lot of detail from people who are on the ground later in the day. But one thing I wanted to just point out was that really it's important to understand in the context of Europe, the AdBlue market is still very, very competitive. So the chart you see in front of you is, again, taken from our monitor publication. We do a crude margin analysis for an average European producer. So we mix in the costs of production for both an integrated urea producer and a non-integrated producer, either buying the urea in the form of prills from within Europe or elsewhere. We add in transport costs for an FTL delivery, which are based on average transport costs for an average European producer. So again, quite a crude analysis, but still it highlights certain key things. And then we take the price and we take the difference between the two. So the very top of the bar represents the price, an FTL price per litre, and then the green part, the darker green part, represents the FTL delivered cost, and the lighter part represents the margin. Now, what you see is that really the FTL cost in this case is made up of a significant part of that is, or the moving part of that is urea. Delivered costs, they move again with diesel prices and so on, but the really volatile part of that bar is urea. So the movement you see is from the urea price. Now, the thing you'll notice is that the urea price moves a lot more than the AdBlue price. And that's a sign of the fact that the market is highly competitive. So when the urea price goes up, it's very difficult for producers and suppliers to pass on the full extent of that increasing cost to their buyers. But the other thing you notice is also that when the urea price goes down, the AdBlue price tends to remain relatively static. And that's effectively a function of the supplier reclaiming some of that lost margin when the urea price was higher, when the urea price goes down. I mean, the other thing to bear in mind as well is that the cost for a non-integrated supplier, and again, even an integrated supplier does their urea costing on a transfer value or alternative value basis, is that the cost of urea is not dictated by the AdBlue market at all. So we see AdBlue growth going up, but really the fundamental cost to the producer is almost entirely out of their hands at this point. And also, like I said, the scope for price movement for AdBlue is relatively limited because of the level of competition in the market, which is, I'm sure, our speakers later in the day will explain to you in their own terms. So just to draw it all together, really the messages are from our side that the commercial vehicle fleet has still significant room to grow in terms of the replacement of non-SCR vehicles. As such, the fleet will continue to grow sharply in the coming years, and there is significant growth for AdBlue consumption in that sector. For passenger cars, well, we expect diesel is likely to lose market share in the coming decade. Nevertheless, the SCR fleet is going to grow very rapidly from a very low base. And again, I'm going to show you some forecasts in a second, but we expect that this segment will account for a third of all AdBlue demand by 2026. On the supply side, this growth poses challenges to AdBlue suppliers and retailers in order to gain acceptance of SCR technology and ultimately diesel with consumers. And on the supply side, we expect the market to remain very competitive. There's no shortage of urea sources around the world, so there's a large potential for non-integrated producers to start up in areas where they can exploit logistics within a particular geography. And this will keep a cap on price growth and also margin growth as well for producers. So just to leave you then with our consumption figures, we'll always give you a forecast in one of these presentations. And the thing to see is that by any margin, the growth expected in this business is very healthy over the coming years. So we've seen 21% growth in 2016 from 2015. This is largely driven by the fact that commercial vehicle sales were so strong. Between 2016 and 2020, we expect to see growth rise by 70%. As you can see by the various bars on that chart, a lot of this will still be driven by commercial vehicles. A lot of it will be driven by non-road as the SCR fleet increases. And you'll see a significant growth in the level of consumption by the passenger car and light-duty vehicle segment. And as we approach the end of our forecast period in 2026, you see that, again, the passenger car vehicle segment and light-duty vehicle segment is the one which really drives growth in the latter part of the forecast as the commercial vehicle and non-road SCR fleets start to reach saturation point. So again, as I said, we expect that number to reach a third by the end of our third of all demand by the end of our forecast period, which will be pushing on for 8 billion litres per year. So hopefully that gives you a good context for the discussion that's going to come later in the day. As I said, we've now covered the demand side of the market. A lot of what you'll be hearing from now on will be on the supply side. If you have any questions, I'm willing to take them now. I don't know if there's a microphone in the room. Any questions at all on the, yeah, that's one. Mm-hmm.
Hi, Kirsty Henry from Kingspan. Have you seen any difference in your figures in your research for AdBlue consumption from, for example, last year to this year?
In terms of what we projected for 2016, actually in our previous forecast, we're doing it on an annual basis now. 2016 was actually slightly better than we expected because vehicle sales were stronger. For 2017, again, we had originally forecast that commercial vehicle sales the growth would steady off in 2017. As I said, the market is open stronger than we had anticipated. There's been 8% growth in heavy and medium-duty vehicle sales in 2017 compared to 2016. So actually, we're expecting that 2017 will be a slightly better year than we had anticipated previously. But again, I mean, when that cycle of vehicle sales is going to level out, it could be the second half of this year when the data comes out, or it could be next year. But we don't expect that growth to continue in the coming years. There's a question behind that.
Chris Haynes from Greenchem. Adam, on your will become infamous slide, I know it wasn't your slide about the decline in diesel cars, there was a dip in 2018-19 of about 8%, and then a bounce back, a resurgence in 2020. What was the logic behind that?
The dip is driven by the fact that we're on a downward trend in terms of vehicle sales, diesel vehicle sales already, well, as a percentage of the market. So that's an anticipation of the higher cost to consumer of the after-treatment technology and acceptance of AdBlue. So that resistance to the technology is already built into that forecast. In terms of the bounce back, well, that's more a leveling off once there has been some acceptance of the technology. But really, I think, like I said, the thing that's really going to push that market share down is the level of scrutiny that we're seeing in the press of diesel. And I don't think that's really driving people from a moral standpoint away from diesel. I think it's really what influences the decision to whether to purchase or not is, will I be able to sell this car on in a number of years, and what will it be worth? So yeah, I think that's really the driving factor behind that fall in market share.